thermal energy storage systems. Speaking of energy, it's going to be awfully hard to take your eye off crude oil today. Below 79.50 now. A lot of that is going to be tied to global recession fears, but also the dollar index close to 112 as we're watching these currencies outside the world get beat up.
That's right. Strong dollar puts pressure on commodities. And then to your point, recession fears, so that's affecting crude. Copper as well. You've had gold under pressure, which is interesting because you would think that potentially this would be an inflation hedge, a geopolitical hedge, given everything we're seeing the world over, David.
Yeah, I know gold is down 9%. The GLD is down 9% for the year, as you point out. Unexpected in many ways, given what Morgan just said, as at least it has typically been viewed as an inflation hedge. You would have expected it to have a very good year. That has not been the case. You can take a look at the GLD or the GDX as well, the gold miner.
What's up, good people? Good people, how you doing? Hey, just back, literally seconds I just got back. How you guys doing out there? What's happening? What's happening? How you doing? Mic check, mic check. If you are new to the page, go ahead and hit the like, subscribe, and notification bell. I'm just trying to remember how to do all of this stuff, good people. I've been going away here from the studio. I'm only going to be here, 11 days this entire month. So, hey, anything I say is not a suggestion for you to buy, hold, or sell. Good morning, good people. We look like we're going to knock out the June lows. Actually this morning, the Dow did. And so it's Friday. Remember, I said this is a 3-day event. The Fed FOMC meeting is a 3-day event, meaning the effect on the markets are going to last. Thursday, which it did, and today, Friday. I will strongly keep an eye on the market today if I were you. I know a lot of you guys are at work, but we want to see what the last half hour will do. And it is not good. Look at the S&P. Just a sea of red. Just a sea of red. Look at that. But we ain't scared. We prepared. And I know it's going to get tougher and tougher and tougher for us to say that. It's easy to say it when the market is green, but when even though we knew this was coming, now that it's here, it's tougher to look at. All right. But we're going to get through this. We're not just going to get through this. We're going to thrive through this because we've been prepared. We've been cashing up as we were dollar cost averaging. And this is why I suggest that everyone have multiple broker accounts. OK, and you guys know after this video is over to click the links below, especially Moo is where we've been cashing up. OK, or wherever you choose to be cashing up. I just offer it for those of you that don't have a broker. Let's look at what's going on. Hey, let's look at, hey, man, I missed y'all too, man. But it took me 3 days to, my next vacation has to be at least 10 days. It took me actually 4 days, generally 3 days to unwind. All right. Hey, good morning. So markets are selling off actually across the globe. You got countries giving tax credits, tax breaks, and it's not doing well. As you can see, there is a sea of red. There's been a lot that has gone on over the last week. We got the geopolitical situation ramping up, Putin with his, hawkish talk of what he wants to do. And it's just a lot of fear around the globe and not just here in the U.S. This will be a global recession. Now, that just sounds bad, global recession. But we've been here before. And the more cash you have to invest during recessions like this, the better off you're going to be at the end of this. This is a slow and steady a road that we are on. The Fed I know you're going to get tired of hearing about the Fed, but the Fed is one of the core reasons why we're in the situation that we're in today. They should have started with smaller increases. Now we've had if he goes up another 75 basis points, being Jerome Powell, well, already 375 basis points back to back is unheard of. It's extremely high. And I always say, if you are driving a car and you're doing 100 miles an hour, you don't come up to a stoplight and then stop. You slow down before you get to the light, or else you're going to blow right through it. So it's just like a runway, landing a plane. You don't just land a plane and continue to coast down the runway at full speed. You slow down. That's why they have a long runway. Well, the Fed didn't use that long runway. He let the plane land and continue to taxi down at 170 miles per hour instead of putting on the brakes sooner. That means that in January, with the data that he had, he should have been doing a minimum of 25 basis point rate hikes then and the quantitative tightening. But he waited till the last minute. Now you know what happens. He's got to slam on brakes. And when he slams on brakes, everybody's face is pressed to the windshield. That's what's happening, which is forcing could force an early recession. So as we look at the market there, look at that. The Dow down. The Dow was down as much as 400 points. As you can see, S&P, NASDAQ, it is not a good start to a Friday. Friday induces more fear, more pain in the markets, and the worst half hour of the trading day today, which is what I would keep an eye on, is the last half hour. We've seen this play out before. That's when I actually do my dollar cost averaging, because it is the most volatile time of on a Friday. We buy fear and we sell greed. All right. Let's read a few. Let's see. It's already 7 minutes in. I just wanted to come in. Fed did this on purpose. Well, right now he is. Actually, the Fed's job right now is to actually make everything worse. That sounds crazy, but his job right now is to make everything worse, to induce it. The Fed job is not to save the stock market, but the economy. So you are right. Yep. That's right. Mommy Trader. Everybody, I hope you went and subscribed to her page. We did a interview. This young lady in 6 years got $1 million. All right. Mommy Trader, I want you guys. All right. We're ready for the sale, because it is a sale. Yep. It's a fire sale. But this is going to be a long fire sale, right? So let's see what goes on today. Let's see if this week is a oversell. And, I would tell you right now, if Monday is green, it could be. I'm not saying it is. Monday could be green. If it is, it's going to be short-lived. I would just say that would be a head fake for those of you that play basketball. Boom, like you're going to go up. Yeah, I wouldn't. You do you. Anything I say is not a suggestion for you to buy, hold, or sell based on my suggestions. I'm not falling for it, okay? Yep. You're welcome, Mommy Trader. XRP is the way. Well, XRP, for those of you that don't have crypto, XRP is a hold for me. I bought a lot of XRP at its lows. I'm holding mine. Let's see what happens. Hey, Blessing. Hey, started your portfolio. That's great. I definitely want you to check out Mommy Trader, because she did it and she is winning. All right. You keep DCAing. That's it. And listen, stay the course. So what I mean by that is don't right now, me personally, I'm not doing any big dumps. I'm not buying any dips. I'm not, going in heavy. The only thing I'm doing is DCAing. And let me say this again. I'm dollar cost averaging. Yes. And do I see it going lower? Yes. So why would you sell now? No one knows where the bottom is. No one knows where the top is. But I'm dollar cost averaging right now. And when we go into a hard recession, because like I said, since January, we know that we've been in a recession. We've been in a soft recession. I guarantee you, you can timestamp this, lock this video up in a vault, come back later, and the Fed next year will say, we are in a recession. And he's going to say, by the way, the recession started in January last year of 2022. That's what he's going to say in 2023. You don't believe it? Go back to 2008. It's the same thing. Yep. All right. So what else we have here? What time? Oh, I got 10 minutes already. Are you buying Bitcoin? Right now, I haven't been, you guys know I've been DCing in very, very, very small amounts in crypto, right? And what I plan on doing, the same thing I'm doing with crypto is the same thing I'm doing with my stock. When I say very, very, very small amounts, I've been buying daily crypto in small amounts. And Bitcoin, yes. So I have been, because I don't care if it goes to 16 right now, because that won't matter if I'm buying Bitcoin. If Bitcoin drops down to 16K, big deal. 3 to 5 years from now, okay? When it's 150,000 a coin, it really doesn't matter if you're DCAing. So that's why I'm buying, because again, no one knows where the bottom is. And let's say that, let me let you guys know this that haven't been through a recession before. It's not a direct correlation. It doesn't, the market doesn't bottom out and and stocks and crypto bottom out at the same time, meaning the recession and stock bottom out at the same time. That's not the way it works. A lot of stock bottom out before the recession bottoms out. And so no one knows where the bottom is. So the market, the recession can be getting worse and the stock market could have already bottomed out, and crypto. So just keep an eye on that. Though the best time to start really accumulating in the crypto looks like it's going to start next year, but I'm starting now. All right. What I'm going to do is I'm going to double down in my crypto DCAing and my stock DCAing, dollar cost averaging, in 2023 when I see that the markets are falling lower. S&P could fall down to 35. I know I've been saying 37.90. That's where I start to buy. But if it goes down to 3,500, that far down, that's when I'm going to start buying more aggressive. All right. And this is going to be a road that we're going to travel. It's going to be a little tough buying fear. But at the end of the day, it has always worked. The stock market, the New York stock market was established, I believe, in 1792. That's a great track record. Okay. All right. Good morning. Good morning. Let me get one more in. And it's at 14 minutes. That's right. DCA is the way. DCA is the way. Yep. That's right. HODL. All right. All right. I don't know about FedEx right now. I believe a lot of stocks, individual stock has more to fall. Yep. Thoughts on the merge? Dropping costs. Well, like I said, I know a lot of people thought the merge was like the second coming, and I just didn't see it. I didn't see it as a big thing. I saw it as a buy the rumor, sell the news short term, which is what I did. So there it is. I just believe that it's going to correlate with Bitcoin right now. I believe Ethereum is just going to correlate with Bitcoin right now, to be honest with you. There's going to be plenty of time to buy. All right. I'm not touching Coinbase right now, and not just Coinbase, any of these brokers. I really don't buy the brokers. They're actually the only financial space that I'm really looking at. Believe it or not, I might catch some heat from this, is SoFi, because I believe that eventually it's going to bottom out. Like eventually it's going to bottom out, and years down the road, and I say years, that it will be a good play to be in. But Coinbase, making money off of fees, and especially right now, hey, let's see what's going on.
The Squawk on the Street, Rick Santelli here live at CME HQ on a wild market day with breaking news. S&P Global PMIs, the manufacturing PMI coming off of the worst levels since July of 2020. Well, it rebounded, but only slightly, 51.8, and that's facing in the rearview mirror the 51.5 I alluded to. These are preliminary set, so in a couple of weeks they will change. If we look at the services side, 43.7 was the weakest since May of 2020. That improved to 49.2, and if we look at the composite, 44.6 in the rearview mirror, lightest since May of 2020, rebounding to 49.3. So 1 out of 3 is in expansion territory. Obviously, services, the bigger swath of the economy, and the composite are not. So there's plenty of room for improvement on a day where the global reset is of giant proportions. Squawk on the Street will return after a short break.
You guys saw that. Manufacturing. You guys saw that. Listen, manufacturing is a big number that you have to look at, because if manufacturing goes down, you got purchasing, you got manufacturing. There's little things that you look at, like the manufacturing of cardboard boxes. And you may say, how important is manufacturing of cardboard boxes? There's actually a report about cardboard boxes, because if the purchase of cardboard boxes go down, just think about this, especially for those of you that have Amazon packages coming every day. If those slow down, that means the economy is slowing down, all right? And that's correlated with GDP, gross domestic product, right? And if we are spending less, rents are going higher, pay increase stops, then you're actually making less money, which is bad for the economy, right? But in one crazy way, that's the Fed's job. Actually, the Fed's job is to induce low unemployment. I mean, high unemployment. His job right now is to put some people out of work. That may sound asinine, but that is absolutely his job. His job right now is to make the purchase price of a home higher to kill demand, right? So if the demand, if he kills demand, that actually helps to bring down inflation. So his job right now is to make day-to-day living for you and I worse. And I know that sounds crazy, but that's the Fed's job, to save the overall market. Unfortunately, he waited so long till he's got to do it 3 times as aggressive as he would have had to do it had he started earlier. Let's face it, earlier, they shouldn't have printed all of this free money. That's a whole nother show. And now, when the fire first started and it was a little bushfire, instead of him putting water on it, he was actually putting gasoline on it, right? And so it is what it is, good people. I'm going to sign off right there. We're just going to monitor the market. All right. All right. Hey, okay. When do I think the next bull run will come? You know, nobody knows. I'm going to end by saying this. There's a lot of fear. It's easy to have a lot of fear when it's easy to be bullish when the market is running up. It's easy to be bearish when the market is falling, right? I don't think that the market will be as bad, or the recession will be as bad as a lot of talking heads think. I don't think it's going to be as bad as 2008. Now, you're going to hear a lot of that coming up because we're in a bear market. So it's easy to be bearish when we're in a bear market. So a lot of people are going to say it's going to be the worst. You know, it's going to be stagflation for 10 years, the apocalypse, you know, night of the living dead are going to come and eat our flesh. You know, you're going to hear all of this stuff, right? Good people, let me warn you and prepare you. You're going to see commercials. They're going to be selling food that you can store in your basement to last for 100 years, you know, stock up on water and tissue. you're going to be hearing a lot of fear mongering right now that the market is going down. Be careful, right? Remove your emotions. This too shall pass. It always does. And then on the other end of it, you're going to find out instead of buying fear, you should have been buying stock. You should have been buying companies. Now, that doesn't mean to go in all at once. Remember, I just said I'm going to DCA if this downturn lasts another 2 years. I'm going to continue to DCA dollar cost average for another 2 years. And when it gets its worst, and I think that we're just like the absolute worst, I'm going to double down on my dollar cost average. So what you need to do, let's say you plan on spending $10,000 over the next year, right? What did he say on the street? So let's say you plan on, let's say, hey, Larry, I'm going to spend $5,000. That's all I have. That's all I have. I'm going to spend $5,000 over 2023, right? You take that $5,000, and what I would say is you stretch it in equal amount of payments over that time period. As a matter of fact, I would say take a quarter of that if you're DCAing now and start now, and then do the other 3 quarters in 2023 when the hard recession starts, if that's all the money that you have, right? But what I'm saying to you is pace yourself, pace yourself, pace yourself. There's plenty of time. There's plenty of time to invest. And right now, I don't think it's the best time to go in big with large sums of money and start buying dips, because I keep saying that the elevator has a few more floors down, rather than, taking all your money and just dropping it like it's hot. Just take your time. Be patient. This is a time to be like Warren Buffett. This is a time to have temperament, because at the end of this, if you play this right, your come up will be absolutely great. All right. I'm going to leave it right there, but I'm just telling you guys, this is a time of patience. I've been here before. This is my 3rd recession, and I've learned my lesson, and I'm just trying to share with you guys. All right. I love you guys. Make sure you check out the links below. If you don't have Moo, go ahead and grab it. That's where we're cashing. I would just say, just keep cashing. The more cash pile you build up, the better, right? And just don't say, oh, I should have bought. As you can see now, I don't care about the 10 minutes. As you can see now, you have not missed. Everybody said, oh, you missed the bottom. You missed the bottom. No, you don't. I've been saying you haven't. Just be patient. Pump your brakes. And if you think you're going to, hey, let me take this money and flip it real quick, you're going to lose money. Now's the time to pace yourself. All right, good people. I'm going to leave it right there. All right, good people. Hey, I was up early this morning praying over you, your finances, your health, your wealth. Okay. Hey, let's stay positive. We're going to stay the course, and we will win. Remember, it doesn't matter how red the market get. I'm going to use incorrect English and say, we ain't scared. We prepared. Right? Have a blessed weekend.